If there is one person synonymous with the term value investor, it is this man, Warren Buffett. For nearly 9 decades, the Oracle of Omaha has delivered incredible returns for both himself and his shareholders. Seeking an annual return of 20% on investment, Warren began that search for outsized returns as a boy, selling Coca-Cola door to door. Warren would buy a 6-pack for 25 cents from his grandfather's grocery store, then he would sell them to thirsty customers for 5 cents each, delivering those juicy profits he sought. It is a pursuit that has lasted a lifetime. It was inevitable that someone as keen a student of money as Warren was would lead him to a career in the stock market. But as Warren saw the market's obsession with share prices, stock movements, and the short-term buy and sell nature of other participants, he wisely pivoted to taking a longer-term view when it came to his own investing. Setting out on his own, Warren began his investment firm, Buffett Associates, in 1956. With seed funding of $105,000, mostly from family friends, Warren began a run of impressive investment returns where he took the initial funds and grew it to over $104 million by 1969. Warren's initial agreement with his partnership's investors was that he would be entitled to 25% of any returns he was able to deliver. This meant that at the time of his partnership's dissolution in 1969, Warren had a net worth of over $25 million. But his investors would have turned their $100,000 investment into nearly $80 million in a 13-year period. A truly incredible feat. Towards the end of his partnership, Warren had begun investing funds into a publicly traded textile business based in New Bedford, Massachusetts. The company's name was Berkshire Hathaway. At the time, Berkshire was battling against the tide of low-cost, overseas manufactured textiles and could never hope to overcome the trend of that industry. After taking a controlling stake in the company, Warren closed his original partnership and distributed shares in Berkshire Hathaway to the investors. Warren was now controlling a publicly traded stock, but maintained his loyalty to his long-term outlook and his preferred investments of choice. He wanted to attract owners, not day traders, to join him as stockholders. Warren continued the pivoting of Berkshire's business model, funneling the last remaining earnings from the textile business into banking and insurance stocks. It was a move Warren would capitalize on. Warren would use the premiums policyholders pay to his insurance companies to invest in other great businesses, initially via partial and eventually full ownership. Taking those earnings, he would repeat the cycle, creating a virtual never-ending cash-producing loop. Time and good judgment have kept Warren at the forefront of long-term value investing. Taking advantage of a misstep by Coca-Cola management in the late 1980s, Warren purchased up to 8% of the company's stock for over $1 billion. This investment has skyrocketed over the following decades, allowing Warren and his investors to enjoy a dividend payment of $704 million in 2022. That represents an incredible return on the original $1 billion investment. Another favorite investment of Warren's is Geico Auto Insurance. Warren initially began investing in Geico through Berkshire Hathaway in 1976. He continued to buy further tranches of stock when it was prudent to do so, until Warren eventually acquired Geico in full in 1993. As an investment, Geico has repaid his faith many times over. However, the undisputed king of his investment division hasn't always got it right. Whether by omission or commission, Warren has had his share of investment mistakes. Warren has been quoted saying that the purchase of Berkshire Hathaway was his biggest mistake. He referred to the purchase of the textile company as a cigar butt investment, as it only had a few years left of earnings. While he was able to repurpose those earnings into a conglomerate spanning all manner of industries, one could wonder where his net worth might now be had he chosen a better investment vehicle initially. Even so, despite abandoning the cigar butt investment theory that led him to purchase Berkshire in the first place, no interested observer could argue anything other than that Warren hasn't done too badly from it over the course of time. Another error was the purchase of Dexter Shoes, a leading American manufacturer of 10-pin bowling shoes. Two mistakes were made here. Firstly, in not foreseeing that shoe manufacturing in the USA was in steep decline due to far cheaper overseas competitors. Secondly, that Warren made the purchase with Berkshire stock, 2% of the outstanding shares at the time. The purchase price of $400 million has only grown as the value of 2% of Berkshire stock has risen dramatically since that time and is now valued in the billions. Some mistakes are made when Warren saw an investment opportunity, but declined to act upon it. 3 of the most prominent missed opportunities are failing to invest in Walmart, Amazon, and Google. To be fair to Warren, he admits that he does not like to invest in areas he does not understand, so he has historically shied away from tech industry investments. Few could truly see what giants Amazon and Google would become in their early years. However, it is a different story when it comes to Walmart, as Warren had made retail investments before, could see the upside in investing in Walmart. He had the funds to do so, and yet still passed on the opportunity. It is a mistake that haunts he and his shareholders to this day. Nevertheless, Warren's mistakes are far outweighed by the incredible value he has created for himself and his shareholders. Berkshire now enjoys a market capitalization of over $500 billion. Quite the journey for the boy who sold Coke for 5 cents a bottle back in his childhood. Outperforming the market for even a short space of time would be considered elite. To do so for more than half a century places Warren into icon status. Even in death, Warren plans to benefit others, as he has pledged to donate almost his entire fortune to foundations that will see billions distributed to worthy causes in perpetuity. A star of investing and philanthropy, a legend built within a lifetime, Warren's presence will be felt long after he is gone. Warren Buffett, truly a master magnate.